Have you ever heard the phrase, "Be your own bank"? Sounds like a dream, right? But what if I told you that wealthy families and savvy investors have been using a powerful financial tool for over a century that lets them do exactly that? It's not a secret offshore account or a risky investment strategy. It's whole life insurance. Yeah, the same whole life insurance your grandparents might have talked about. But this time, we're looking at it from a completely different angle. How to use whole life insurance to build wealth, grow passive income, and become your own source of financing. Let's break it down. Most people think of life insurance as just that. Insurance. You pay a premium, and if you pass away, your family gets a payout. End of story. But whole life insurance has a hidden feature most people overlook. It builds cash value, and this cash value grows steadily over time, tax-deferred, and can be borrowed against. Think of it like a savings account on steroids, with guaranteed returns and zero market risk. Here's where it gets interesting. When you pay into a whole life insurance policy, part of your premium goes into the death benefit, and part of it goes into building your cash value. Over time, that cash value grows and earns dividends, depending on the insurance company's performance. The more you fund it, the more it grows. And the best part? You can borrow against that growing cash value at any time, for any reason. No credit checks, no loan applications, and no approvals. Now imagine this. You need to buy a car. Instead of going to a bank and paying interest to a lender, you take a loan from your own policy. You pay yourself back with interest. That interest goes right back into your policy. You're literally recycling your money. That's the foundation of becoming your own bank. Let's walk through an example. Say you fund a whole life policy with $10,000 a year. After a few years, you've built up $30,000 in cash value. You borrow $20,000 to buy a car. Instead of making monthly payments to a traditional lender, you set up a plan to repay your policy with interest, just like a regular loan. But here's the catch. While your loan is being repaid, the full $30,000 of your cash value continues to grow, as if you never took the loan in the first place. That's the magic of uninterrupted compound growth. The wealthy love this because it lets them use their money twice. Once to earn steady, compounding returns inside the policy, and again to invest, buy assets, or fund business ventures, all while retaining control over their cash. Now let's talk about tax advantages. The cash value in a whole life insurance policy grows tax-deferred, and if structured properly, you can access that money tax-free through policy loans. When used correctly, you never have to pay taxes on the growth of your cash value. This makes it one of the most powerful tools for long-term wealth building, especially in countries like the US, Canada, and the UK, where taxes on capital gains can eat away at investment profits. This strategy is sometimes called the infinite banking concept, popularized by Nelson Nash. It's not a get-rich-quick scheme. It takes discipline, consistency, and the right structure. But over time, it creates a private, tax-advantaged banking system that you control. It also provides stability. While stock markets rise and fall, whole life insurance policies grow at a predictable rate. Many mutual insurance companies have paid dividends for over 100 years, even during the Great Depression and the 2008 financial crisis. That kind of reliability is rare. Now, you might be wondering, what's the catch? The biggest one is time. Whole life insurance isn't a short-term play. It takes several years for your policy to build substantial cash value. You also need to work with a knowledgeable advisor who understands how to design these policies for maximum cash accumulation, not just death benefit. Many agents don't get this right. Also, you have to commit to paying your premiums. If you stop early, you may lose some or all of your benefits. So it's not for everyone. But if you're serious about building long-term, generational wealth, and having access to cash without jumping through hoops, then becoming your own bank might be the strategy you've been missing. Let's recap. Whole life insurance can do more than protect your family. It can become a financial engine. You fund it. It builds guaranteed, tax-deferred cash value. You borrow against that value to fund your life. Whether that's buying a car, investing in real estate, or starting a business. And all the while, your money keeps growing in the background. It's not just about insurance. It's about control. It's about creating a system where you never have to rely on a traditional bank again. That's the real power of whole life insurance. If you found this video helpful, don't forget to like, comment, and subscribe. And if you want us to dive deeper into policy design, tax strategies, or real-life success stories, let us know in the comments. Thanks for watching. And remember, wealth isn't just about making money. It's about keeping it, growing it, and using it wisely.